Today, my good friends in stock market mutterings, you may smell a stench. And that stench you would smell would be from my brain burning. That's right, because I'm going to look deep inside of my noodle this week and use every ounce of brain power that I have, which is very little, by the way, to deliver you what I think could be one of the best trading opportunities this whole year. Now, in order for me to explain this, let me take you back to December. Christmas, to be exact, when I was doing a happy hour, and this is what I said.
This is a great time to buy stocks.
Now, as I do this week's market mutterings, I perhaps think we are very close to seeing that same type of scenario play out, but this time to the other side. So let's talk about this. First, we'll go into the market. All kidding aside, let's get serious here. Let's talk about the stock market because it has not stopped going up. Every single week this year has been a green week for the market. And this is roughly close, don't quote me to the exact point, but this is close to a 20% rally coming off of Christmas Eve lows. Now, it's not uncommon when you have such aggressive selling to get aggressive buying, and then when you have aggressive buying to get aggressive selling after that. That's just the shifts that the market makes. But there are a couple of things that stand out to me. One is the percentage points that this market has rallied and how it has done that. Meaning it's pretty much made a beeline straight. We've had very few red days this entire year. In fact, I think the biggest was the second trading session of the year. After that, there have been some red days, but they've been very small. The other part to this is as you look at the markets here, you are now approaching a much more significant resistance point than we had been talking about in the past. So when we left off last week, it was all about this 200 moving average and would the market be able to stay up? So you're coming really close here to the SPY 280 to 281, which I think in the near term would be some sort of either leveling out point or some sort of retracement point or resistance point where you'll see a basic shift in this market's behavior because you just are approaching significant numbers. Now, when you look at this rally, there were a few statistics that I read, and that was that you're looking at the longest winning streak in the markets since 1995. So we're talking over, what, I can't even count. It's 25 years, whatever it is. Significant, okay? And you're reaching these levels where you're making historic moves. And I think what you're going to see here real soon is a pullback in this market. It just seems that's where we're going to go. Now, on that note, I want to say this. One thing I've always done as a trader, not one thing I've always done, because I haven't always done it, but one of the things that was significant in my development as a trader when I became successful was not allowing what my personal beliefs and my personal thinking was to get in the way of my trading decisions, meaning I don't want to just sit here and say something has to happen. And if you look back at the video there on Christmas, I said I can't perfectly time the bottom, but I can kind of get close to where I think what the probability is going to happen. Now, I'm under no illusions the market can do whatever in the hell it wants. That oversold can become more oversold. That overbought can become more overbought, And I really don't like to look at things. It's a day-by-day process. But as I'm starting to line up and I'm looking at different types of trades, I'm starting to think you've got to entertain the idea here of looking at short selling on some of the stuff. Now, you just can't run into it right now. You need a couple of signals. You need a couple of clues right there, a couple of back tests, maybe not buying the dip. You got some other news out there that could still create more higher prices for the market, like trade deals and other things. So you can't just say because it's up this much, because this is what it's done in the past, means it has to do it. It does not. But I do think what you're looking at is the closer you get to SPY 280 and SPY 281, the value for a trader changes. So when you're at the bottom like that, the value is to the long side. That's where the ranges will come in to your favor and where the bulk of the money will be made. I think we're going to start approaching that in the next week or 2 weeks where that range goes to the downside. And I'm not saying we're going to correct all the way back to where we were on Christmas Eve. I'm not saying it's going to be a panic, but I do think we're probably going to work our way a little bit closer to the bottom down there towards the 200-day moving average, which would right now be 274. So I think you might see a little slide or a little pullback there in the market. Time will tell. Now, on that note, there are some things that you just cannot overlook. And that would be on the movement of some of these stock plays, and just the general movement they've made since Christmas Eve. And one of the things you've noticed is throughout this quarter with earnings and stuff like that, companies have been treated favorable. The ones that have done well have been rewarded, but also the ones that have missed, like Wayfair today on Friday, that didn't lose as much money or whatever. This stuff has turned into just, absurd. You can feel the absurdity sometimes in the buying. So I want to bring up TTD. Again, when I'm saying this stuff, I'm not predicting doom and gloom. I'm not predicting stock market crashes. I'm not saying I'm going to short first thing in Monday because this stuff is ignorant. However, like I said in that video at Christmas, there's a few times that come by every year where the opportunity may arise where large sums of money can be made. And I think we might be approaching that. So I want to be prepared for that event, and I'm sharing that with you. The first is TTD. Now, this was an earnings winner today. We did very well trading this, but it was to the long side, obviously. But as I look at it, this thing is about 91% since Christmas Eve. You look down here, it tapped the 200-day moving average on the 24th at $101. And now you're closing up today $197. So you're talking about something here that's well into the 90% range. This has made a 90% stock move in 2 months. In 2 months. So yes, earnings good. Yes, it's a strong stock. Yes, solid company and everything right now. But you can't ignore the fact that this thing is 90%. So you don't have it just on this one. You had the same thing. You saw like a perfect storm of this today with Wayfair. Here's another one that was trading somewhere around $81. And then you're closing all the way up here to $150. So this is like an 80% mover. And then you have OLED, which was the same. OLED was left for dead. This stock was crushing, falling apart at the beginning of January at $78. And now you're all the way up here to $147. So I think you can follow along here where the common sense factor starts to come in. Again, it doesn't mean that they're not going to go higher on Monday. But if you start to see somewhere in this market where dips stop getting bought, that would be my first signal. Not just because the market dips, because every single dip has been bought up on these stocks. It's barely rolled over at all. So when you see that happen, that would be some sort of first clue, in my opinion. If you could get a little bit of breakdown over shorter term trend lines and a little bit of just a different theme, a different behavior in the market, that would kind of signal that. And on that flip side, I think you got to look at stuff like this, that at some point you're going to get a slowdown. Again, I'm not discounting the earnings of these companies and stuff like that, but damn, 90% in 2 months, it's not going to go, I don't think it's going to go up 90% in the next 2 months. So what I'm saying here is all these TTD, OLED, Wayfair, you can throw Boeing on top of this. Just look at these moves. So while I'm still here in this bullish camp saying, okay, I'm still, I'm not going to just rush in and start shorting everything. I'm still somewhat bullish here till we roughly get around 280. I'm not ruling out any kind of news event that might pop the market on an early Monday or Tuesday. You always have the trade deal laying back there. But, right here, the back of my mind, one eye open, keeping a real close eye, and these would be my top ones: TTD, OLED, and Boeing. I think you got to look at those as possible retracements. Again, I'm not saying they're going bankrupt or they're going to crash or go back to where they were at Christmas Eve, but you cannot ignore the moves that these stocks have made. And if the opportunity presents itself, you could be looking at one of those days where some of these stocks like Boeing, like TTD, drop 20. $25, and that's what we're in this game for, man, is to slay it. Whoa, 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 right? I scared my light. Anyway, I look better in the dark. Couple more I do want to talk about real quick is Tesla. I'm going to offend a lot of people, but I kind of like the Tesla short here. I was talking about how the 300 had been I was talking about this all week. 300 had been so important to this thing, and how I was really wanting to be a short seller on any breakdown of 300. Well, it kind of came that way, and it turned out to be a really great trade, but I'm not going to take credit for it because I was kind of lucky. Luck meaning it wasn't going under that 300. It was holding on for it to dear life, but I'm sure most of you know the story. Consumer Reports came out about the Model 3. And, you know, from that moment, I mean, it took a big beat. That thing took a beating on Thursday. Its stock was down all day. Look what it did to it. It just murdered it. It did a little bit of bouncing back there, but not too much. So what I'm looking for is if this thing moves back underneath 290, I think you've got a potential to get back down to the lows here, which is 278 and such. Now, I do want to give you a long idea because I don't want to just sit here and all talk about shorts. The long idea is Facebook. Now, this thing has kind of taken a different earnings approach, and that is it's faded a lot. I mean, pretty much it's had like 1 or 2 good days after earnings. For the last week or so, this thing's from 171 down to 161. Not huge, but that's decent for Facebook. And you're sitting down here on the 20 moving average on a daily chart. I don't know if there's a chance that you can get a gap fill, maybe on a panic down in the market. I'm probably asking too much at 151, but you never know. But I do like this long. I like the way it's holding up here over the last few days. It's keeping itself roughly around 160. You got a strong bounce on Friday around 160. I'm interested in this one here as a long, and I think you're getting here with maybe this sell-off is just a tiny bit overdone because as the market's been going on up, this has kind of been ignoring it and kind of doing its own thing and pressing downward. So let's watch this. I like most of these for shorts, but I do like Facebook here, possibly for a long. But still, regardless of what I said, the market can do whatever in the hell it wants, whenever it wants, and that's just the way it is. As a trader, your job is to not allow your biases and your thinking sometimes to get in the way. It's trade what you see, not what you believe. That's ultimately going to save you in the long run. So anyway, guys, thanks for watching this week's Market Mutterings. As always, if you need help with your trading, take a moment, visit thelinkonlist.com, click on the Trade Room tab, and you can start trading with us right away. Until next week, take care.